In today's video, we're going to discuss the Foreign Housing Exclusion, also referred to in Form 2555, Part 6, Part 8, and Part 9. If you're a U.S. taxpayer living abroad and file U.S. income taxes, then this video will help you to prepare the form correctly and save you a lot of money by optimizing your taxes. Hi, I'm Patrick Evans, founder of U.S. Tax Practice. I'm a certified public accountant based in Switzerland, servicing U.S. taxpayers here and in the rest of Europe. And I'm in the business of helping fellow U.S. taxpayers with their tax preparation, compliance, foreign bank reporting, and expatriation. Today, we're going to discuss the Foreign Housing Exclusion, also referred to in Form 2555, Parts 6, 8, and 9. The Foreign Housing Exclusion is a great way a U.S. expat can reduce their U.S. tax burden. However, the rules are cumbersome and confusing, so make sure you pay attention while I walk you through the form. What is the Foreign Housing Exclusion? The Foreign Housing Exclusion is a reduction in your income that works in conjunction with the Foreign Earned Income Exclusion. The Housing Exclusion uses the housing expenses you have paid throughout the year to increase your Foreign Earned Income Exclusion and lower your income. Due to the higher cost of living in many locations, the IRS created this deduction in order to offset the cost of living outside of the U.S. Who can take the Foreign Housing Exclusion? If you meet the requirements of the Foreign Earned Income Exclusion, you may be able to take the Foreign Housing Deduction. It's dependent on both the amount of your expenses and what country you live in. If you don't qualify for the Foreign Earned Income Exclusion, you will not be able to take the Foreign Housing Deduction, as this is one of the main requirements. What are the requirements? In order to claim the Foreign Housing Exclusion, you must meet the following conditions. 1. You must qualify for and claim the Foreign Earned Income Exclusion. The Foreign Earned Income Exclusion is a reduction in your foreign earned income, lowering your taxable income on your U.S. tax return. This exclusion requires you to either be outside the U.S. for 330 days within a 365-day window, or be a bona fide resident of a foreign country. If you qualify for the Foreign Earned Income Exclusion, you must also claim the benefit on your tax return in order to claim the added housing exclusion. If you chose not to claim the Foreign Earned Income Exclusion on your tax return, you cannot claim the Foreign Housing Exclusion. 2. You must have qualified foreign housing expenses. Qualified foreign housing expenses include the following: rent, utilities, personal property insurance, leasing fees, furniture rental, parking rental, and repairs. You cannot use mortgage payments, domestic labor, purchase furniture, and anything deemed lavish or extravagant. Additionally, you also can't deduct telephone and internet expenses. Additionally, your foreign housing exclusion cannot exceed your total foreign earned income for the tax year. 3. You must have paid your housing expenses from employer-provided funds. Employer-provided funds are any amounts paid to you by your employer and are included in your gross income for the year. The amounts can either be designated as housing funds or part of your regular salary. If your employer pays your housing expenses and you do not include that amount in your gross income, then you cannot use the housing expenses to calculate the deduction. 4. Your housing expenses must exceed the base amount specific for your location. Once your expenses have surpassed a base amount determined by the IRS, you can take the housing exclusion up to the maximum allowed by your location. The base amount for your location can be found on the IRS website, Form 255 instructions, in the last page of the instructions. Currently, the base amount is 16% of the Foreign Earned Income Exclusion, and the maximum amount is based upon your location, or the location of where the expenses were incurred. How is the Foreign Housing Exclusion calculated? The Foreign Housing Exclusion is calculated on Form 2555 along with the Foreign Earned Income Exclusion. Once you have determined that you qualify to take the Foreign Housing Exclusion, you will then have to figure out how much of your housing expenses you'll be able to take on your tax return. First, calculate your total qualified foreign housing expenses for the calendar year. Next, figure out how much Foreign Earned Income Exclusion you will take on your tax return. Multiply the Foreign Earned Income Exclusion by 16%. This is your base amount that you must exceed in order to claim the Foreign Housing Exclusion. The amount of your qualified foreign housing expenses over the base amount are then compared to the limits set for your location, which are found in the IRS instructions for Form 255 towards the back. The amount of foreign housing exclusion allowed is added to your Foreign Earned Income Exclusion amount, and the total is entered on your tax return Form 1040. Is there anything else you need to know? If you are self-employed, you'll need to calculate the housing expenses in a different way. Your housing expenses are considered a deduction instead of an exclusion. While the amount is still figured on Form 2555, it does not get added to your Foreign Earned Income Exclusion on Form 1040. Instead, it gets entered on line 36 in the Adjustments section. You cannot use the foreign housing expenses you use to figure a home office deduction to calculate the foreign housing deduction. The foreign housing deduction will reduce your total taxable income, and therefore your income tax, but will not reduce any self-employment tax you owe from your self-employment income. However, if you are self-employed in a foreign country and your resident country has a Social Security totalization agreement with the United States, you will not be liable for Social Security taxes. You will need to enter a statement in your tax return declaring that you are implementing the Social Security totalization agreement. Married couples living together must calculate their housing expenses jointly. If they file a joint tax return, either spouse, but not both, can claim the foreign housing deduction on their Form 2555. If the married couple files separate returns, only one can claim the foreign housing exclusion. Married couples living in separate households can claim separate housing exclusions if their homes were not within reasonable commuting distance from each other's residence or tax home, where you primarily live and work. If you move during the tax year and have expenses with more than one foreign location, you will need to split the expenses based upon the location. The amount of your location limitation will be calculated based upon the total number of days spent at each location during the year. You can find more information on U.S. tax compliance and tax preparation on our website at www.ustaxpractice.com. But if you have a more specific question on U.S. tax compliance, get in touch. Just give us a call on country code 401 followed by 52-533-4581. And don't forget to subscribe to our YouTube channel for more U.S. tax updates and tips. You can also find us on Facebook, Twitter, Google+, and LinkedIn. And we also send out regular newsletters too, so make sure to fill out our newsletter form. I'm Patrick Evans with U.S. Tax Practice. Thanks for watching and see you in my next video.